Good morning everyone. I thought I'd start today with a coffee out on the rocks for your first thoughts for the day. Obviously we had a very big move in the US stock market overnight. The Australian market today is going to really, everyone who wants to or has even ever thought of buying stocks in Australia will be doing so today. There'll be the fear of missing out. There'll be the bulls who want to add to their portfolios, and there'll be a lot of exciting individual stories about particular stocks, a bit of meme trading. Pretty much everything you can imagine this morning will be happening. So it's going to be an update for the market. There's no doubt about that, of course, no brainer. But is this, I was thinking of having as the heading for my report as I was up in the early hours of the morning, watching everything that was happening, going against my view, that, you know, this is it. It's really turned around. I was on AusBiz yesterday morning and I said, I think it's time for a bounce, an upward correction in stocks, and we could be going sideways for an extended period of time. And I also said that I thought it was time for a correction, upward correction in the Australian dollar. So I hope you saw that video yesterday on AusBiz, and we did circulate it on the website a little bit later in the day. Just a key point to keep in mind here is that the Nasdaq's only retraced 50% of its decline so far. So it could still be that we're just seeing a volatile top, very volatile top. And you know that volatility has been very much the name of the game in recent times. Markets having huge swings whenever they were sort of basing or topping out on a near term to medium term basis. It's still possible that my bearish outlook for the market is accurate. But I have to say that it's certainly food for thought in last night's trading. I think what we need to do here is that in the written report, I'll be sending out a few key levels that I think will really matter on the day. I think if you're a bull or a bear, you have to be very aware of what's going on here, obviously, but think of it as a massive rally to mid-range, mid-recent range in this topping out formation that I had been forecasting, or at least alerting people to risk. It's not an absolute given that this is the start of a move to new highs, but you would have to say on a price action basis, there's certainly encouragement of that view. I'm not sure. In terms of economic fundamentals on the day, obviously the main driver is everyone feeling Omicron won't be a worry, so therefore we can all relax. The issue I have with that is that the market move isn't just about Omicron. The financial markets are not just about Omicron, the virus, vaccines. They're about what's going on in the real world. Now, what was interesting and favorable was that we saw record exports for the US and record imports for the US. Now, that's not because of a massively, suddenly strong economy. It's because they finally got their port in LA working. So, but it is encouraging because it suggests that, and so it was all the backlog of exports and imports that have really driven that number. So that's an aberration. That's not indicative of how US exports and imports will be performing going forward, but it is indicative and it is a strong sign that supply chain disruption is certainly diminishing, and I have been saying that of late. So we're going to see diminishing supply chain disruption, and that's obviously a huge leap forward to get the LA port going, and that interchange between the sea and land transport, trucking and rail in the US starting to operate a little bit more effectively. So that is a positive. We saw also in the US the economic index, sentiment index, it bounced a little bit, but it's still near 15-year lows. So not everyone in the US is as excited as the market, is what I would say from that. And we saw in Germany, there's the business sentiment index did fall away a little bit again, but that, I must say, is not at terribly low levels, not like the US sort of consumer sentiment and business sentiment indexes are. So Wall Street very carried away on the day, one of the biggest up moves you will see in a lifetime for a single day, no doubt about it. We've seen similar moves to the downside, similar moves to the upside, but that was particularly noteworthy. I think we're looking at a market that will be wanting to maintain upward momentum, and as you will be used to me saying, any signs of that price action falling back in on itself is probably a warning sign that this is still in a very volatile overall, and I think this is my call for the day, rather than saying I got it wrong and we're going up to new highs. I'm not quite at that point yet. I have considered that. I think where we are is that the market is going to be volatile and sideways. I think there is another 24 hours of upside risk, and then we'll probably get a 48-hour period of downside risk. Very big moves, fantastic for day traders. I mean, if you're an intraday trend trader following a 5-minute chart or something, just go with those trends, because they're the equivalent of, actually seriously, yesterday's range, that's a 1 month range in 2012, 2013. So plenty of opportunity for active, aggressive traders. I wish you well with all of that. May the markets be fair, even kind. Clifford Bennett, Chief Economist, ACY Securities. Thank you very much.